Hello traders, it is Wednesday, August 7th, time for our live event. Hello Harry, how are you doing today?
Pretty good, Pete. How are you?
I'm good. I'm a little tired. I'm going to be taking some time off, so I am looking forward to that. Been working really hard to get our new trade signals out. So on all of the charts, you're going to see green buy arrows and red sell signals. There will be some blue exit arrows from time to time as well. So we'll see how they fared when we take a look at some of the symbols that we have. As always, we like to start these live events off with a review of our prior picks. So I'm going to show you mine. It was Merck during the live event. I highlighted that immediately when the live event started. And so let's zoom in and take a look. And we'll go into the 15-minute chart. It'll be a little easier for us to see. And the live event was right in here last week. You can see we had follow through selling. And I exited the trade the next morning for about a 65% gain. I was long some puts. So that was good. And then on Sunday, I gave you GM as one of my short picks. And this is the price action. We had a 160 point S&P 500 drop from the close Friday till the open Monday. So was not a good time to try and take any kind of shorts into that big of a drop. So really shouldn't have done much of anything. You didn't have any confirmation of a technical breakdown anyway, so there was no reason for you to take that short. I do still like it on a longer term basis, and MU was another one that I highlighted. You can see how that stock also gapped down. Let's take a quick look at those two charts, and then we'll go to Harry's pick. This is a nice breakdown here, and you can see that even with the market higher today, what's the stock doing? So market gapped up. We had about a 100-point rally. What did the stock do? Nothing. It gapped up and it's reversed all of those gains pretty close to where it is from the prior close. And then we'll take a quick look at Merck, and we'll take a look at Harry's pick. So Merck, you get this little bounce in here, okay? We took profits there. You get this little bounce. You can see how the stock is still weak relative to the market. So market has been bouncing the last couple of days. Two red candles. Merck is a longer term short still. Harry, what did you have for the live event last week?
So I picked Tesla, and I did caveat it that I hate Tesla. I hate picking Tesla. It looked good on a long side. So I did a call debit spread, and I did a 232.5, 237.5 call debit spread. When I saw that it was acting, well, like Tesla acts, what I did the next day was I bought back the 237.5 calls for a $1.15 profit. Then on a bounce, I sold the 232.5 calls for a 79-cent loss. So I managed to pull out a 36 cents profit on the call debit spread, but it was one that you had to manage. So it was a profitable trade. It worked out, but you had to manage the trade correctly in order for it to work.
All right. Well, yes, and this market has been extremely volatile. I'm just going through Tesla. You can see some of the sell signals on a 5-minute basis. I'm just going to forward it and you'd be able to take a look. Oh, that was from yesterday. Market. Let's talk a little bit about the market here. Wow. We have had some big gyrations. I'm going to put up the extended hours for the 5-minute so that you can see what the heck has been going on. Look at these moves. I mean, these are unbelievable moves, even overnight moves. You've got 100-point moves. In the last 24 hours, we've had 3 100-point moves within the range. So you've got this big decline, big rally, big decline, and now we have another big rally. And now we have a decline starting to form right in here today. You can see how we're starting to test the downside. So what that tells us is that as traders, we can expect an incredible amount of volatility. We're not really able to get many of our longer term bearish swing positions on because we were just starting to enter those last week. And we're just starting to get the technical confirmation that we needed. And then blam, Monday morning, 160 point S&P drop. Well, we know after a big waterfall event like this, the market takes the elevator down and the stairs up, so we can expect some bounces. Well, now we're getting up to that 100-day moving average. Tried to poke above it yesterday, tried to poke above it today. Now we have a little bit of a bearish hammer here. Yeah, I think this is going to be a decent area to put on some shorts, not go gonzo. Put your first starter shorts on here. This is where you can add because we could get the next leg lower, or we could go a little bit higher before we hit resistance. In any event, I've seen the depth and speed of the drop, and now I know that the short side is where we want to be. So I'm just waiting to add to short positions. What's your take on the market, Harry? How do you feel in here?
I mean, to me, it's all about that SMA right there. I mean, you saw yesterday, it went right to it, right? So it's what, at 529.35, somewhere around there yesterday, 529.47 today. Goes right up to it and bam, gets, I mean, if that wasn't a technical knockback, you'll never see one. I mean, that was it, like textbook. Hit it and huge selling hits and you get knocked back. Now today, once again, you go right up to it. Maybe this time you go poke above it a little bit by about 50 cents, $1. And now you get knocked back today again. You didn't get knocked back as badly today, but you did get knocked back. So for me, you stay on the short side as long as you see the market closing below that SMA. Now, once that SMA is cleared, right? And by cleared, I mean, it's going to take a couple of attempts here. So, you know, you need to close above it. You need to open above it the next day. That's, you know, about as liberal as you want to get on the confirmation there. When you see that, okay, then you might want to take your profit on your shorts or take the loss there and get out. So you have a very clear line in the sand, and that is the 100-day SMA on SPY. It's clearly being noted institutionally right now as a kind of bull bear line. So watch for that. Watch for 529.45, 529.50, that area. And see if SPY can clear it. I can see arguments on both sides, but as long as it's below, then you got to be bearish, even though the market's up today.
You mentioned an important point. When you're doing your trade analysis, what is your trade duration? Where does your confidence lie? So if you are a very short-term trader and you look at this nonsense and you go, I don't know what the hell is going to happen in the next day. I don't know what's going to even happen intraday. I had to keep my trades very short-term in here. Then yes, you would be for sure leaning on that 100-day moving average, and you would be using that as your guide. If you have a longer term perspective, and that's currently where my comfort level is, when I see a move that's this fast and this deep, this is a 10% move in about 3 weeks. That tells me that the selling pressure is heavy. Now I just have to wait for the right entry point. As I mentioned, I'm short here on a rejection of the 100-day moving average. I'd be willing to put another short on here. Why would I do that when there's a chance that we could bounce above the 100-day moving average? Well, I would do that because there's a chance that we don't move above the 100-day moving average. And I know based on this price action, I want to be short. And I don't want to miss whoosh the next leg lower. But with that mindset, I understand that yes, we could go up and test the 50-day moving average. So I've only got 2 positions on in here. I would be looking for a rejection up in here, and I don't believe we'll get any higher than that. Downward sloping trend line, AVWAP-Q, 50-day moving average. This is where I would be looking to add again, and then perhaps even add again below the 100-day moving average. So if I'm not willing to weather that storm and to accept a rally back up to this level, then I shouldn't be putting on longer term short positions. But my confidence is very high that between now and sometime in September, October, that we are going to test the 200-day moving average and quite possibly even take it out, given the selling pressure that I've seen. So that's my bias. That's my trade duration. That's my mentality. So you can fall into any
He's
camp
pretty
that you
bearish
want.
here.
It's a big drop. It's a big drop. If you look at this drop and you compare it to other drops like this, little mixed overlapping candles, you know, just a very stubborn move lower. Well, here we were ready to get long, and we did get long here. We waited for the breakout here. We got long in here. We waited. So this is all fine and good, but look at the difference between this drop, the magnitude and the speed of the drop, and this drop. This is legitimate.
Yeah, you know, I look at the drop from April 4th down to the drop that to April 19th. You kind of had this 30-point drop, and then up we went. You saw that again on July 17th down to July 25th, and then it started going up again, and it looked like we were going to get the same kind of pattern there that we saw towards the mid to end of April, which was sort of, you know, this coming down, testing the 100 SMA, and then popping back up above the 50, and then away you go. But then, of course, the you know, Japan happened, and well, I mean, not just Japan, obviously, but that kicked things off certainly. And like I said, I blame Japanese housewives for a lot of this. Partly joking, you know, because in the 80s they figured out that their savings weren't making any money in Japan. They had 0% interest rates, and so they were called Mrs. Watanabe's, were their kind of termed name. And at one point, they represented 30% of all the liquidity coming out of the Japanese markets into the U.S. and European markets, and they were quite essentially just cashing in their savings, 10,000, 15,000, whatever it was, yen, and converting it to US dollars, or converting it to whatever currency in Europe they were using, and then investing in those markets because they had 5% interest rates, 4% interest rates. And it was working, and it works as long as Japan's interest rates are low and the other markets' interest rates are high, and the yen stays weak to the dollar. But you know, you get you know, you trade in 160, you get $1 for every 160 yen on the trade there, and then all of a sudden you're only getting 100 yen to the dollar on the trade back. Well, that wipes out all profit, right? It wipes out any profit you got off the interest rate differential. In fact, it starts creating a loss scenario. So you start to bail before that currency differential really hits you, and that happened in the 80s. And what happened? They did it again. But this time it wasn't Japanese housewives. It was institutions that picked up on the trade as, hey, this is a good trade. And they took advantage. And that happens everywhere when you have an interest rate disadvantage, by the way. It just was very popular in Japan in the 80s. But Japan was very over leveraged on it. And as they announced a surprise interest rate hike in Japan, the Bank of Japan, and the yen dips to the dollar, then you get this kind of rush to the, you know, to safety. And that's sort of one of the things that kicks off a global panic.
Yes,
Thanks,
you know,
Japanese housewives.
if you look globally, the national debt levels, the sovereign debt levels are just astronomically high. So there's always a chance that you start getting into credit events or exposure based on certain trades that are overcrowded. Selling option premiums has been a very, very crowded trade. And there's definitely a squeeze to people that have been short premiums. Will put up VIX very quickly. This is a great way to watch. You can see that spike in VIX. It went from, in essence, $40 to $90 on Monday. So the guys that have been selling premium forever are taking a lot of pain in here. And that's what happens. So you have these adjustments that the market has to go through. If I take a look at the price action, so in here, we were expecting that we were going to get a market pullback, that this rally was very, very weak. Light volume, float higher, tiny bodied candles. You've heard it all before, been mentioning it for weeks. So we're in cash waiting to see what happens. Well, now we start getting some volatility off the high. This was the really big window that we were focused on. We had all the earnings last week. You know this from our live event. We had the FOMC statement a week ago. Seems like it was a lot longer ago than that, but it was just a week ago. And we were waiting to see what might possibly play out. So the Fed came out and said, hey, you know what? We're kind of happy with where we're at right now. We've got good economic growth. We have inflation coming in. Market's near an all-time high. We don't really see any reason to ease. Now, they may change their tune after Friday's jobs report. It was fairly weak. And so you've got earnings, the Fed, major economic releases, all the official PMIs came in, ISM numbers came in, jobs report, and the reaction to all of this news was that. All the
It almost doesn't matter in the end what the Fed does. I mean, it's all about what does the market expect the Fed to do, right? I mean, the market is expecting clearly right now a 50-point rate cut in September. And they're pricing that in. So it's almost as if, you know, the Fed comes in September and cuts rates and does cut rates, but only cuts it by 25 basis points. You might get a bearish reaction off of that. So, you know, a lot of expectations start getting built in, and particularly as you have this sort of mini crash that we had, you have these job numbers that come in as they did, that just, you know, obviously there's not going to be an emergency Fed meeting in August. Anyone who thinks that not going to happen, that sends the absolute wrong signal. But the expectation of 50 basis points in cuts kind of puts a very high bar. It's almost as if they cut the 50 basis points. Okay, you did what you thought you would, and we already priced that in. And you don't get that huge you don't get that huge pop that you normally would have gotten off of a rate cut. So it'll be interesting to see. There's not much coming up right now that could provide a bullish catalyst. I mean, obviously, you still have Nvidia earnings on the horizon in a few weeks, and maybe obviously that always has an impact, but earnings are over, like you said. The Fed isn't going to be meeting again until September. You have possible conflict coming up on the global stage. You have possible bad economic numbers coming in, where now bad news is bad news with recession fears coming in each week. So you need, particularly in August, which is typically a low volume month to begin with, you really need a positive catalyst here to get the market back off the deck. And without that, you don't even need that much selling. You just kind of have a buyer's boycott, right? You get a buyer's boycott, and that's enough to keep it below the SMA and drifting downward.
I think the only catalyst, the only possible catalyst that I see coming up is there is a Jackson Hole conference of economic advisors toward the end of the month. If Powell somehow hints that yes, 50-point cut could be possible, well, then that means a 25 basis point cut is a given. Then yes, the market would certainly like that. But I don't know that you're going to get that out of him. And you could even see a little rally on hopes that that might come out. And then once the news comes out, you get your resistance and then a move lower. So I think they're going to keep their avenues open. They've been very patient to this point. I think they've actually done a very good job with interest rates and trying to rein in inflation. Mind you, they were late to the game, so they had to act more aggressively. But in general, I think that the Fed has done a good job, and right now they're in the driver's seat. And you're going to have the crowd out there, the bad news is good news crowd. And they're going to rejoice that, hey, the Fed's going to be cutting rates. Be careful what you wish for. Okay. My preference from a bullish standpoint would have been economies chugging along, inflation's coming in, good economic growth, good jobs, higher interest rates have not been able to stifle growth. We just keep grinding higher. That's what I would have liked to have seen from a bullish standpoint. Once you start getting into, gee, the Fed needs to cut rates, that's typically not a great backdrop for the market because economic conditions are deteriorating and you get the fear that, uh-oh, did the Fed wait too long? Are they not going to cut rates here? How much farther might the market fall? And when they do start cutting, even if they're more aggressive than what people expected, you still get the, uh-oh, what do they know that I don't know? So you can't really win. And we'll see what happens in September. But between now and then, I expect to see some nervous jitters. This sell-off here tells me everything I need to know. It tells me that sellers are aggressive and they're going to be looking to unload. The higher we bounce, the more anxious I'll be to add to my short positions. So I did have a question here. Perhaps the Middle East is weighing on the market. Everything is weighing on the market right now, and you have to look at it in total. Wars per se do not have a lasting market impact. They just don't. As horrific as they are, as bad as they are, they just don't. So I don't think that's a major factor, but you can simply add that to the list. And just look at the price actions, all you need to really do. You don't have to become a junior analyst and get into the deep fundamentals. This tells you that they're anxious to reduce risk. And
yeah, I mean, you get these sort of short-term. I mean, I remember. Yes, I remember when the Ukraine war started, and every day you get these sort of news breaks and pops and drops in the market, and you get these sort of short-term impacts, right? But if you zoom out, what was the overall impact of that war? None, right? I mean, in fact, the market just went up, 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 up since then. The same thing in the Middle East. You get these short-term hits or pops, and then you zoom out and it has no real impact. So unless you're looking at a material sector, you're looking at maybe oil, right? Or something like that. And even then, to try to predict the impact on that, where you can have experts in the area get it wrong, is sort of a fool's errand. So I wouldn't put too much stock into it. I think that on any given day, a news release can stifle a rally or pop a slide, but you pull out, it's not really important.
I'm taking a look around, and I was going to post my short. And incidentally, since we're talking about the trade signals, you can see that Dell does not have a signal on M5. So I've got an M5, 1530, H1, D1. These are all of our new trade signals, but it does have bearish across the other time frames. So it's just neutral on M5. And so if I take a look at the 5-minute chart, I can see, okay, Dell's starting to bounce. There's my sell signal right in there. How might I possibly set an alert on this? I'm going to right click, create alert, and select trade signal. And I'm going to be looking for it to go bearish. So sell signal, M5, add that, save it. Now it's on a sell signal, so it has to go to a buy signal, and then it has to go to a sell signal, and then I'll get an alert. That's one way that you can trade the signals. It's going to take a pretty decent move. I do like Dell on the short side, and you can see on a 5-minute chart, I think it's going to be my short pick of the
Well, SMCI certainly hurt Dell, hurt me as well, damn it, but certainly hurt Dell. So I think that's going to be in the penalty box for a while, and it's probably a really good short there. I like it.
Yeah, I saw that one too. I'm going to bring that chart up next. And
I mean, that
so
thing popped $100 right off open. Great. Everything was looking good. And then the reality of the margins came into play and down it went. It'll probably stabilize here around 500 to 530 on SMCI. And obviously, you know, they announced the split, which normally you'd see stock announce a split and then off it goes. But in this case here, you get, you know, analyst downgrades and bad margins, even though they raised their revenue forecast for next year. So raised their guidance, announced a split, stock drops $90.
And so we go into the daily chart, and you can see the earnings announcement right here after the close yesterday. There's your drop to a new low right here. Did not even get back to the 200-day moving average, and now it's below the low from the week. So yes, that looks like an excellent short. Also, market higher. Runs up in here. What did the stock do? Couldn't get off the deck. When the market was doing this, couldn't even get any higher. So yeah, this stock looks pretty weak. You would have liked to, if you were going to short this on an earnings trade, you would have liked to have seen it hug the low of the day a little bit more and not bounce at all. And then as soon as you started to see this selling off of the lower high double top on the S&P 500, that's when you would have wanted to see ka-chunk, 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 new low of the day. If you saw that price action, you would have been able to take a short there. It would have been an excellent entry point for a day trading short.
I agree.
So, yeah, so
my pick of the week
I think it's nice.
Probably going to be Pltr. Once again, Pltr. I picked it about, what, 3 weeks ago, Pete, I think it was. I'm picking it again. Great response to earnings, great chart, strong stock, very well priced. You can get shares on this. You can buy in the money calls. I would do that a couple of weeks out. They're not that expensive. You know, there's a lot you can do to play this stock. I think it's got a lot of strength. You look at this market dip just right here in the past hour or so, and look at what Pltr has been doing during that dip. I like it. I think it's an excellent long candidate.
Yeah, that's very, very strong. By the way, when I'm flipping through charts, you'll see the buy and sell signals. Ask yourself, could I have made money on that signal? That's really the key thing, because if the entries are good based on the signals, then how much money you make on the trade really comes down to how well you're able to manage the trade. You get a nice move off of that signal. You can always put a stop in at your entry price or just above it. That way you're not going to lose any money on the trade. So you've got limited downside, unlimited upside to it. So just look at how timely and accurate these signals are when I'm flipping through the various charts. So back to Dell, I just wanted to conclude. I'm going to be taking some time off. So next week, Harry's going to do a solo live event. And I need to make sure that my pick is going to stand the test of time. And so if I look at the daily chart with the market and then I take a look at Dell, I can see that this stock has been rolling over. It's got resistance at the 200-day moving average. And the question I need to ask myself is, do I feel that when I'm back in 10 days or so, that this stock is going to be below this 200-day moving average? Do I feel that the market is going to bounce and roll over and show some weakness? Answer is yes. I'm expecting to come back and see this stock trade lower. So I'm not going to give you a long pick, because some of you are going to think, oh, Pete liked this long, and you know, the market right now is not there for me to be trading the long side for more than just day trades, very short term.
You got a question here, Pete. Is the exit signal related to the buy sell signal prior to it? Meaning when you see the exit means to sell the trade prior to it.
The exit signal just means that you should take profits on the position. So it is tied into what the longer term, the next longer term time frame is telling us. So in other words, if you're trading on an M5 basis and the M15 is on a sell signal, so longer time frame, sell signal, the shorter time frame will be in short only mode. Short, exit, short, exit, short, exit. There won't be any buys, okay, until the longer time frame goes into a buy signal. So let's say M15 is on a buy signal, then what you'll see on a M5 basis is buy, exit, buy, exit. And you know, the point to the signals is also that, you know, you can see them right here. Keep your losers small, ride your winners. So I just brought up HIMS just to see what that was doing. I am short HIMS from this morning, so stock is rallying. It's into the gap right in here. Not overly concerned with that. So on the trade signals, keep your losses small. Let your winners run.
Looking at some other potential trades here. Trying to see. I mean, I'm looking at Meta. It's staying above its SMA, which is good. It's not exactly as strong as you'd like to see it today, given the market. I think that 500 line there is probably offering some pretty strong resistance. You know, you get these technical, non-technical levels of resistance and support, which are at these sort of flat numbers like $500, right, or the 50 mark. So you know, you get to those levels, you start seeing a little bit of support or resistance form around them. $500 a share on Meta is a pretty, you know, noteworthy price point. So I think until it clears that, I probably would avoid it, and I need to see it showing some good relative strength. With the market up 1% today, $5 on SPY, you'd want to see Meta up a little bit more than it has been, right? So I don't see that right now. I don't see it yet.
Quick note on signals. When you are in a horizontal trading range, I don't care what indicator you use, it's not going to be effective. It's not going to work well. So you really need trending stocks. You need breakdowns. You've heard us say that time and time again, because this is just what I consider to be the meat grinder. Up, down, up, down, up, down. It's not going anywhere, okay? So you need to avoid those situations. You want nice, tight, orderly price patterns on a D1 basis. We've talked about that many, many times.
Disney's a decent short, perhaps, off of their earnings miss. Not miss, but they have to pay more for Hulu and some other issues that they've had. So, you know, you can look at that breakdown on Disney. It's got a really kind of ugly bearish daily chart there, certainly, that would support a short. I'd like to see it close near the low of the day. And if it does that, then I'd give Disney a look as a short. You know, so right now I'm looking at Disney short, Pltr long. Those kind of two trades would interest me.
And instead of hawking it, click GTC, set your alert line right like that. And whether it happens tomorrow or next week, you're going to get an alert when that price level is breached. And that would be a significant price level. Then you keep going and looking at every other stock and setting alerts so that they're delivered to you on a silver platter, regardless of what the market does. You see a good long, you're setting alerts. You see a good short, you're setting alerts. And then with this market gyrating back and forth, whatever happens during the course of that particular day, you're going to start getting alerts, and these are going to be very attractive trade candidates for you.
What else do we have here? Someone asked, I know you don't typically use the 20 SMA or the weekly chart, but I like using them. Great. Do institutions care about them, the 20 or the weekly chart? I mean, look, it's you know whether institutions care, whether or not, based on if they work or not. Technicals cannot, by definition, work unless institutions are using them, period. Retail traders do not act in unison enough. There aren't enough retail traders in the world using a 20 SMA on a stock to make that matter, to make the buying and selling on that. Unless you're talking about like a $4, $5 stock, low float, whatever, then sure, a bunch of retail traders can maybe make a dent there. But overall, retail traders by themselves are not going to provide support or resistance on a stock based on an SMA. So only institutions are. If you see, for example, a stock like Apple or the market in general, so an ETF with SPY, bouncing off of a 20 SMA, and it's clear that that line is meaningful. In other words, you couldn't just randomly say this price and it bounced off there too. You need to see clear attempts at it. You need to see rejection. You need to see confirmation. You need to know that that invisible line does exist. Then that by definition means that institutions are paying attention to it. We know they pay attention to the 50, the 100, and the 200 SMAs. That was shown very clearly on Monday. Yesterday when the market went right up to the 100 SMA on SPY and you saw the rejection. Today, same thing. Right up to it, you saw the rejection. Only institutions can do that. So if it is working, and by working, I mean not just because you think it's working or I can look at that chart and randomly pick two other numbers and say those are working too, but it's working the way you saw the 100 SMA work yesterday on SPY, then yes, clearly institutions are involved because they would have to be. It wouldn't work otherwise.
I had a question on Google. What do I think of Google? Is it a good swing short? It could be. You can see these tiny bodied little candles in here. These are doji, so there's some equilibrium. The stock's kind of chopping around. I'd like to see it test and hold this resistance level. Was support, now it's resistance. That's right around the 165 level. So what would I be looking for in the course of the next week? What is that ideal pattern? The ideal pattern is that the stock has already shown us some weakness. It's fallen, perhaps a little overextended on the downside, just like the market. So when the market stages its nice big bounce that we're kind of expecting in here, what do we want to see the stock do? We want to see it hold the prior resistance level. Was support, now resistance. You want to see a very, very stubborn bounce. Just can't get going. Then when we see the market roll over, we'll be confident that, yeah, there are sellers keeping a lid on it. What we don't want to see is a stock that falls and then, boom, we get, stacked green candles and a big bounce and a big rally. That is not what we want to see. It tells us that buyers are still aggressive in there. We want to see a lid on the stock.
Okay. Any other questions on your end there? Looking here and seeing what else we have.
DELH, let's take a look at that. Yeah, that is a nasty little stock. So right off the gate, here's something I noticed. You got earnings here before the open. That is a bearish hammer. So they tried to rally the stock with the market this morning and they punished it. So yeah, I like that pattern and I like that selling pressure. And there you can see they tried to rally with the market this morning with that 5-minute chart. And that didn't last long. They spanked that thing right back down to the low of the day. So yeah, I think CELH is going to set up for a decent short.
Someone asked here, that by the way, that daily chart on SID, that looks just about as ugly as their drinks taste. Have you ever had those drinks? They're crap.
I have not.
Oh, don't bother. They're just like drinking medicine. With the market retesting the 100 SMA, potentially going higher, maybe the 50 SMA, isn't it too early to enter these swing positions? Shouldn't we wait till the bounce is over? When you say that, okay, so let's say it goes through the 100 SMA. Well, now you have to wait for confirmation, right? Maybe it's going to break back below it. Maybe it doesn't, and it keeps going up. But now you have to see, is it going to hit the 50 SMA? What you know right now That's what you know right now, is it can't get through the 100 SMA at the moment. That's what you currently know. And so you have a line in the sand of, if I'm going short, that is where I probably want to get out if it breaks through there. And you have confirmation if you're short to stay short if it doesn't. You also obviously have relative strength and relative weakness. So, the only issue with swing positions right now is you're in a very volatile market. That means you could wake up tomorrow with the market up $12. You could wake up tomorrow with the market down $12. That is pretty kind of, I don't know, that's a volatile, right? And that's reflected in VIX, the volatility there. So that is your danger area is, could you, if you have a short position on yesterday because we closed below the SMA and you wake up this morning and it is, crushed because of the pop. Yeah, that's the real danger in this market is the volatility. So I would just keep that in mind.
My take on that also is if you have to ask the question, then you should not be shorting. You have to have confidence that even if it breaks above the 100-day moving average, as I mentioned, this is my personal feeling, it's going to hit resistance at the 50. So I don't, and everybody has this all or none mentality too. It's like, I'm all in, I'm all out. You scale into positions, okay? You don't have to put everything on at one time. So I had shorts here. I could have taken gains on those shorts on Monday, but that really was not my intent. So I had a good entry here. I'm looking for another good entry. I'm looking for another good entry. I'm looking for another good entry. As long as this resistance holds and I'm not seeing any real conviction on the part of buyers, that magnitude tells me I'm comfortable being short. If you're not comfortable, what's going to happen is I'm going to follow Pete in this trade. You take the trade, and Pete's willing to hang on for a long time. He's got staying power. He's looking to add. When we get up to AVWAP-Q, you're freaking out. I knew I should have waited for more confirmation. That's why you don't follow. You don't follow other people. You follow what your heart is telling you and where your confidence lies.
So nearest, can you talk about why not build a fig leaf position with the market where it is now and VIX has decreased? I can't argue with you. I mean, it's the perfect time to do a fig leaf, technically. I mean, if you want to go about it. So if you are, but that is a long-term investing, right? That's not what we do. Obviously, we don't. That's not a swing trade. That's not a day trade. That's sort of a long-term investing strategy where you want to leverage an investing strategy with minimal resources. So if that's what you're doing, then yes, you're right. This is probably a good time to do that. But you just have to pick the right stocks to do it with. And that fig leaves involve some, I guess you could say, fundamental analysis to go along with any type of technicals. In fact, more fundamental than technical. So, that's not what we're talking about here. But if you have stocks that you like and you're getting good premium for them, obviously Nvidia, for example, is a top candidate, given the premium, given the stock, given the history, for a fig leaf strategy. So if that's the type of strategy you're into doing and you like, this is, I can't argue. It's a good time for it.
Yeah, and even if you get a big volatility spike like we had, if you're gonzo on Nvidia and you think that this is just a fantastic buying opportunity, well, guess what? Option implied volatility has just exploded. So you're going to be able to sell naked out of the money puts on Nvidia and be very handsomely rewarded for that. The only problem with it is you have to be willing to buy the stock at very minimum half the strike price you have to hold in reserve because you'll be able to buy it on Reg T margin. So you got to be willing to buy the stock. You can't just willy-nilly be out there selling put premium because it's expensive. That's a great way to lose money. You've got to be willing to take assignment, hang on to the stock for the long term. Consider that more of an investment strategy and less of a trading strategy.
Where is support on SMCI? Someone asked. Support's at 530, which it broke through. It could get above it back again by the end of today. 500 and 470. Those are the three lines that you would look at for. Keep in mind, though, SMCI is a very low float stock. And because of that, it can be subject to wild swings in price action that can ignore technicals at times. The 10-to-1 split it has coming up is going to help with that low float. But for the moment, very low float stock. So any huge buy or any huge sell here on the institutional side can break through those support levels or resistance levels on this stock. So it's certainly a mover. It's going to continue to move throughout the month. But those are your technical support levels if you were to, look at them as just this wasn't a low float stock, but it is. So there you go. All right.
And the one thing about SMCI that we like is you'll notice here on the D1 chart, lots of room to the downside. Okay, we don't have a support level and then another support level and another support level. There is a lot of room for this stock to be able to drop. And that's what we look for, whether we're trading breakouts or breakdowns. We need to have all of those resistance or support levels removed. So this stock's got a clean path to fall lower.
Someone asked, why am I am buying up Nvidia? I am buying up Nvidia. The reason I'm buying up Nvidia is even in this market, which is bearish right now, Nvidia, I feel, has a hard floor at 100. And any stock I see that has that much upside potential and that much of a hard floor, with earnings coming up, and I don't think it breaks that floor as we go into earnings. Nvidia typically, more than 75% of the time, surges into its earnings number. So I have a stock that surges into its earnings number. It has a hard floor that is pretty close by. So yeah, that is why I'm currently bullish on Nvidia. But those are reasons outside of just pure technicals, other than, I guess you consider the hard floor of 100 a technical line of support. So, all right.
It is the darling. It's, if you're a trader, it's on everyone's screen, right?
Yeah. I mean, look, and it's one of those, the thing goes to 115, 120, and everyone's, oh, why didn't I buy it at 103? Well, it's very, when it's at those prices, I mean, that's always the biggest thing when buying a dip, right? Would buy the dip, whatever it's called, because usually when a stock is dipping, there's a lot of fear around buying it, right? I mean, it's sort of, yeah, if you could buy, is 511 a good price on SMCI right now? Probably, yeah. But I mean, do you buy it now? No, because look how bearish it is. And as Pete said, there's a lot of downside there. So, buying the dip sounds good in theory, but in practice, it's usually during that dip that it is the scariest time to buy. And what you have to do is look and show that there are many stocks that never recovered from their dip, right? I mean, if you were a dip buyer, let's say on BABA, right? And this stock, which at one point was at 337, and so it hits 140. And you go, oh, I'm going to buy that dip. That's more than a 50% drop off the high. Well, where are you now? It's at 78, right? So you can look, there's a lot of those type of stocks out there that for a while were the market darlings. BABA, I remember for a while, Zoom. These were stocks that everybody loved, everyone wanted to buy. And then when they started dropping, everyone started saying, time to buy the dip, time to buy the dip. And now you look back at it and realize, well, any of those dip buyers would have been screwed. And what people hate to do and what you need to do, and again, this gets more into a little bit long term than it does what we normally cover, but is everyone doesn't want to miss the initial bounce, right? So what they do is they come in and buy these dips before there's confirmation that a base of support has formed. And what does that mean? That means, if you look at, we go back to BABA, for example, right? And you look at that, a base of support never formed on that stock. You had these moments of consolidation, but you never got that pop off of that support that would tell people that, okay, the low might be in here. And so if you bought that dip, you were buying it before you saw confirmation, before you saw confirmation on that at least some kind of support was there, because you were too afraid to miss the pop, the initial pop. But if you're going to buy the dip correctly, you have to miss the initial pop. The initial pop will come if, if it does, you miss that, and then you go in and you buy it after that, and that you see that the pop is going to hold, it's confirmed, then you go in. That's how you do on a long term. Otherwise, you're going to be DCAing your way to oblivion on these buy the dip stocks.
Yep, that's a really good point. So the breakout, the initial breakout gets it on everybody's screen. So that's when you're excited, and you need to have a breakout, or you're going to be looking at stocks that are trapped in a horizontal trading range. Okay, that's no good. We can't predict that price movement. So when you get that breakout, you want it to be clean, crisp, big, heavy volume. The more technical resistance levels the stock can get through, I'm talking trend lines, major moving averages, horizontal support resistance. You want that big volume. So that now it's on everybody's radar. Now you have to wait for that follow through, because the follow through is where we make money on the trade. You need to make sure that that breakout is going to hold, that it's not just going to instantly reverse, because a breakout is going to attract profit takers. Oftentimes the EMA 8 on a breakout is a good example. ASTS is a stock that one of you asked about. Yes, it's very strong, beautiful chart. You can see the breakout through horizontal resistance. So the stock has this long green candle, and you want to wait. Make sure that this long green candle holds. You want half of it to be preserved. It was. EMA 8 catches up in here. All right, I can feel pretty good that this is going to be a decent entry point for my long position. I've waited. I have technical confirmation, and now I can even add to the position as the stock continues to move higher. Yeah, ASTS is a very nice looking stock, very strong relative to the market. Nice pick, Roberto.
Anything else here? Let me take a look at one more stock here that I might like, which is no. I'm looking at a lot of these typical stocks like Microsoft and PanW and Meta. They're all kind of, you look at their daily charts, and none of them are very appealing. You're looking on a kind of maybe a weak side of things. I do like Dell there. Let me see here. I was looking at Oracle. Oracle might not be a bad short either. When you look at that chart, it broke through its 100 SMA. It has tried that 3 times already. This one, if it's closing towards the low of the day, kind of like I said with Disney, Oracle as a short, you got a little bit of a way to go down to 119 to get to the next level of support there on this stock. That might not be a bad trade, shorting Oracle here in this market either.
Yeah, I like that. That's nice. Yep, I see that nice horizontal breakdown right in here. You're in the gap right now, so it's continuing to fill the gap, which happens to coincide pretty closely with that 100-day moving average. And you got no pop in the stock with the market making this nice move off of Monday's low. This stock is still right where it was Monday, so there's no lift in it. Remember, that's the price action that I explained to you earlier. What you're going to be looking for over the course of the next week or two is for the market to be rallying and for the stock not to be able to bounce. Wham, wham, wham. There's somebody out there that's got a lot of shares to go, and they are hitting every bid that they possibly can while the going is good. And that is what's keeping a lid on the stock. So when you finally get that market rolling over, whoosh.
And look on, go to Red Royal Flush there, and you'll see on bearish. So go down to the Red Royal Flush, and you'll see right there Oracle, third stock. There it is.
Dell's there, Oracle's there, Delta Airlines. That's also pretty weak looking stock. You've got a nice downward sloping trend line in here. Stock plunges this week, not able to recover, right back on its low. Yep, take a look at the 5-minute. And there you can see it drifting lower all day, even when the market was moving higher. Stock was down. And this is in the new version that we're going to be releasing this week. You'll see real relative strength and weakness. Red below zero, green above. It's a nice visual. You also can see the watermark that we've added to the charts. Lots of new display features that are going to be in. But the trade signals are the really big thing. And you can see your sell signal up in here on Delta.
All righty. Next week I will be certainly on. You will hear, your usual run of rants from me. And I believe, by the way, someone just quickly asked if Dollar General is a good short. You do have earnings coming up, but then not for 3 weeks. I would, it's broken the upward trend line here. You do kind of have a bottom here at 116. That's $4 away. It's not, it's a decent short. I wouldn't say it's a great short. It's a decent short because you do have this compression that started on July 24th and it compressed, to the beginning of August. And then you got a little bit of an upswing out of that compression. And this drop is kind of putting it back in that range. So, for this to be a great short, you'd want to see it break below that compression that started on July 24th. But as a day trade, it's probably a decent day trade. It's certainly weak today, and it's weak to the market, and it's got a weak D1. So, it's not like you're going to hurt shorting that. It's just, there are better shorts. It's just an okay short.
And Dltr in the same category, the same group, that you can also see there's a compression right there with a breakdown. I did short it 2 days ago, but the stock was super choppy. I can't recall. I think I might have shorted it yesterday or the day before, and I shorted this breakdown right in here. I got busy. I missed my exit on it, and then I looked at it an hour later and went, what the heck? But I was confident in the longer term chart, so I just put a bid out there a little bit below my entry price, and I was able to exit the trade. But this is the kind of chop that you've got to deal with. So when you're looking for good longs or good shorts, make sure you take a look at that M5 price action over the course of the last week. And if you see choppy price action with lots of mixed overlapping candles like that, know that you do not chase those stocks. Always look for a failed bounce and resistance, and then you'll have your shorting opportunity. AXON, someone asked me about. Take a look at that. And yes, that is a very nice big gap up today. And it has cleared all horizontal resistance. So that's the way that we like to break out. And not only did it break out, it's continuing to add to that breakout. So yeah, if I look at a chart like that, this stock is likely to continue to move higher. And this is a major move off of an earnings.
I'm guessing that's an earnings reaction. I don't know if it is or not, but given how far away the next earnings date is and that move, I'm thinking it's got to be an earnings date this morning.
Yeah, that's an earnings reaction. And so find out what the company's doing right, because obviously it's got a lot of buyers in there right now. And this is a substantial breakout. So you can take a small position in it here, and then just starter. You would want this support to hold, which was resistance. Now it's support. And then in the next 5 days, 10 days, depending on what the market's doing, if you see this stock hold this long green candle, then you can continue to add, because buyers will eventually get more and more aggressive, and those who are profit taking will exhaust that supply, and then the stock will start to inch higher. But that is a very nice compression breakout post earnings. Nice one.
So in essence, UPS a good short? No, it has support at 124.20. and the stock is actually green on the day right now. You know, I know the market's up, but generally you want to short a stock that's going to be red here, and you also have that support coming in that's less than about $1 away. So even if it does drop a little bit more and go in the red today, it's probably going to bounce off the support because you don't have any real selling momentum in it. Once that support's broken, just put an alert there. Then yeah, then you probably have a pretty good short. But at the moment, not really. Okay. You got anything else in your end?
I don't think so. I think we're good. I think we've answered most of the questions. So just to give you a little additional market backdrop here, we're going into a news vacuum, folks. I mean, this is typical for August, and you've got all the rats in DC have fled, so politicians are going to be in recess. You got the Fed in recess. You have traders taking time off. The kids are going to be going back to school, so they're trying to get their last-minute vacations in. All the big economic news is behind us. All the big earnings releases are behind us, and so expect very light volume trading over the course of the next few weeks. It's very typical this time of year. So I'm going to be watching for signs of a bounce and resistance, and then I'll feel comfortable that I can get short and just watch the market drift lower. So be mindful of that and trade well. If you have the ability to take time off, take time off. I'm going to be doing that and pushing real hard to get the new version out. So I'm going to be relaxing. We will see you when I come back.
Enjoy your vacation, buddy. And we will see you all next week.
All right. Thanks, everyone. Trade well.
Thanks.